In terms of metrics, group revenue increased by 34%. GP went up by 33% with GP margin at 28%. That slight reduction in GP margin is predominantly because of the mix of businesses over that period, more pelagic in that period than the previous period. HEPS of 95 cents, the full year number last year was 55 cents, so 91% increase in HEPS. Periods where fuel is up and catch rates are lower are the periods where we struggle in the business, and in periods where catch rates are up and fuel is low, is you've got the perfect stars aligning during that period. And we do seem to have the perfect stars aligning right now, where we've got good catch rates, a strong biomass, and lower fuel prices with very, very strong demand in the markets we operate. If we look now just at our hake business, and this is our traditional hake business, core business, our revenue was 19% up, and you can see it was driven by volume, which was 8% up, but more price and mix, which was 11% up, with no benefit from the forex. GP was 31% up, with the GP margin expanding to 35%, and EBIT almost doubled for the same period, with EBIT margin of 21%, EBITDA margin hitting 27%. So very, very strong performance in our hake business, which is something, in fairness, we were expecting at some point to rebound after 3 years of poor catch rates. If we look at our business, it's been a strong focus in exports. 61% of our business is now exports in our hake business. There was a 30% growth in exports year on year, same period, with a strong focus in terms of growing that side of the business with the additional demand and the additional vessels that we have. So although it's showing Europe 79% and 79% last year, the pie is not the same. It's a bigger pie. So we've shown 30% growth in Europe, pretty flat in Australia, and really demand going to the markets where they need it.
From a debt perspective, and touching on the SA debt, we'll touch on the group debt on the next slide. South African net debt has decreased by 74 million rand, from 1.92 billion rand to 1.847 billion rand. And based on the improved performance, the SA net debt to EBITDA covenant has decreased from 1.92 to 1.63 times. Turning now to the group net debt. Group net debt was also down by 74 million rand, from 2.66 billion rand to 2.587 billion rand, with the group net debt to EBITDA ratio decreasing from 2.5 to 2.1 times. From a group capital allocation perspective, the group continues to consolidate the acquisitions that we've effected over the prior years, with a focus now on generating the targeted returns. Organically, the group will continue to pursue efficiency projects and organic growth opportunities that deliver targeted returns and ultimately driving long-term shareholder value. The significant focus on the capital structure continues, with a target set to reduce debt by 50% over the next 3 years through non-core asset disposals, maximizing free cash flow generation, and determined cost reductions. Of course, a strong balance sheet will allow the group to support improved dividends in the future.
So you'll recall I mentioned that we went through quite a strong growth phase in the periods following listing, to the extent last year we've reached a consolidation phase. And what we've said, there are 3 key pillars now that we are focusing. The first one is to really optimize cash generation from our core businesses. And that's our SeaHarvest hake business and our pelagic business. In terms of the hake business was to increase exports, which you've seen we've done. We've grown it by 30%. Efficiency improvements, new vessels, factories, etc., modernizing our fleet, which, you know, we're very thankful in terms of support from our shareholder base in terms of being able to do, and we've done that. If we look forward to H2 now, which is what everybody will be looking at, I do believe that these catch rates in terms of hake will continue. As I've said, when we see the declines, they happen for 3 years. When we see the recovery, it does happen over a longer period of time. Of course, we are always dealing with nature, and you don't know, but July and August, we've seen a continued good performance in terms of catch rates over winter. So that's been very pleasing. We definitely have a capacity now to catch our full year TAC this year. You'll remember that last year we left quite a bit of fish in the water. It was a lost opportunity. We've capitalized on that, and we will catch our full allocation this year in terms of hake.